So I understand that everybody has got to start somewhere. I started somewhere. You've got to start somewhere. So anyone that's new to crypto, anybody that's new to trading, we're going to start things from the beginning. So this is going to be a trading session 101, and it's going to be the most simple trading session that anybody has ever taught you. You've got all sorts of different metrics that can complicate things. You've got your bull flags, you've got your bear flags, you've got your bull pennants, your bear pennants, you've got your support, you've got your resistance, you've got your trend following traders, you've got your trend continuation traders, you've got your trend reversal traders, you've got your capitulation traders. We're going to simplify this. Forget about all that. You don't need to know that. We're going to use moving averages, and I'm going to show you a simple tip that you can apply to your charts that's going to firstly tell you whether you're bullish or bearish, whether you're following the trend, more importantly, when it's time to get out of a trade. So what I'm going to do is I'm going to show you a way how you can apply this indicator to your chart. So the first thing that you need to do, guys, is get yourself on to TradingView or a platform of your choice. I'm not affiliated with TradingView in any way. I've just got a paid subscription with TradingView. Don't want you guys to get a paid subscription. I want you to get the free subscription on TradingView. And with that, you get 2 indicators that you can use for free. So we're going to need 3 indicators, but I'm going to show you a simple trick how you can apply these 3 indicators to your chart by just using 1 indicator. But before we get into that, guys, I want you to continuously think about this. If you're new to crypto, firstly, you need to be asking yourself these questions during the course of the bull run. Feels like we're early now. It feels like we're in the build phase as far as alt season is concerned. Bitcoin's ran since the 1st of January 2023. Bitcoin is rampant as far as the bull market's concerned. Dominance has hit 60% of the whole of the crypto market. And there's signs that dominance is starting to pull down, indicating that could potentially be the first leg of alt season. So if the first leg of alt season hasn't occurred yet, which it hasn't, then that means that you're early in crypto. Now, I want to ask yourself, or want you to ask yourself these questions during the course of the bull market. What is it that you want to get out of crypto? If it is whatever, say 50,000, say 70,000, depending on what capital that you're putting in, is it that you're looking to get? If you reach that amount, have you got an exit strategy? And how would you feel if that amount that you had was 20% more, or 20% more than what it was yesterday? Would you expect it to be 20% more the next day? Would you start getting greedy during the course of the bull run? And how would you feel if you took profits on something, just as an example, 100,000, you took 50% profits at 100,000, that thing went to 200,000? How would you feel about that? Flip it in reverse, guys. Flip it in reverse. If you had that one thing that was at 10,000 and then it went to 2,000, how would that make you feel? You need to keep asking yourself these questions during the course of the bull run. I'm going to continually teach risk management techniques that help us bank percentages along the way. And it's another thing that I want you to ask yourself, guys, because this is a little bit about me. If you buy a lottery ticket, there's 2 lottery tickets. You've got one lottery ticket where you've got 50 million prize money, $50 million prize money. Then you've got another lottery ticket, you've got 100,000 prize money. So what's the probabilities of getting 50 million? Just say it's 60 million to 1. What's the probabilities of getting 100,000? Just say it's 110,000 to 1, because whoever it is that's putting the lottery on are making their money. So which one would you prefer? The one with the higher probability of getting something, or the one with the least probability of getting something? Because I want the most chance of getting something. And that's why I'm going to be banking the cryptocurrency along the way, guys. I don't mind taking 5% off of something, and that 5% that I've taken off goes at 2x. Still got money in there. And then I'll take that 5% off and that 5% off, scale out during the course of the bull market and bank my profits elsewhere. And another thing that I'm going to be doing on this channel, guys, going off kilt again, I'm sorry about this. Another thing that I'm going to be doing on this channel, guys, is educating that when one bull run ends, i.e. the crypto market, and another bull run begins, it's usually the dollar, it's usually commodities, it's usually other things depending on what time of the market that we're in. If grain's scarce, then commodities such as grain's a good thing to get into. But what I'm going to be doing, rather than just scaling out during the bull run and then losing those gains, I'm going to re-diversify my portfolio, and I'm going to re-diversify my channel into other assets so we can ride the next bull run together. It's not going to be cryptocurrency, guys. That's going to have a bear market. And while that has a bear market, I want to be having a bull market with the new assets that I'm going to be buying from taking profits from this bull market, going into the next bull market for the next asset, for the next bull market for the next asset class. So basically, It's not going to be taking profits and losing profits. I'm going to be diversifying. Something else is going to be going through a build phase while this is going through a bull market. Whilst the thing's going through a bull market, I'll be taking profits and putting it into that thing that's going into a build phase. Guys, one thing that people go into in times of scarcity is the dollar. And if people go into the dollar in times of scarcity and you're taking profits into the dollar, what do you think's happening, guys? You're taking profits and going into something that's going into the next bull run. Everybody goes into the dollar and everything falls against the dollar. The pound, all the fiat currencies, they'll all lose value against the dollar. The dollar will be king and the dollar will lose the least amount of assets. So if you're in the dollar at that time, that means that you're losing the least amount of assets. Even if the dollar's not, it doesn't go up in value, guys, it loses money over time. But if that loses less than the rest of the assets, then that's the best thing to be in during a time where everything else is bleeding. And then you can diversify. It's basically keeping your profits, guys, keeping your profits and diversifying it elsewhere. If you put that in for the NASDAQ for a couple of years whilst crypto had a bear market, and then re-diversified out of the NASDAQ as an example, and then put it back into crypto, then that means that you've gained during the bear market. And that means that you're going to gain again during the course of the next bull run, because you'll be coming out of the NASDAQ. It's probably a poor example, say the S&P, coming out of the S&P and then going into crypto during the next build phase to run the next crypto bull run. So, guys, that was me with my ADD, taking me completely off topic with this video again. So apologies for that. Right, okay, this crypto indicator. This is a good way, guys. If you're new to crypto, if you're new to charting, this is a good way that you can identify exactly whether we're bullish, whether we're bearish, more importantly, when to get out. So let me show you an example of that. You've got Trading View up. First thing that we're going to do, and this is the trick, guys. So if you've got the free Trading View, you can't add 3 different moving averages on there. But what you can do is you can click 3MA, click 3MA, and then you're going to get something that looks like this. Yours is probably going to look a little bit like something like this, guys. Reset settings. Yours is going to look something like this. Right now, what I want you to do is think about this like a traffic light system. In the UK, we have red, stop, amber, get ready, and then green, go. I don't know what it's like in your countries, but we're using the traffic light system, the UK traffic light system, as this example. So what I want you to do, you've pulled up your 3MA, your 3 moving averages. And what we're going to do is we're going to double click on that, and that's going to bring up the settings. So just pause this video, go along with me, go and rewatch this video, share it with your friends, guys. I'm trying to get to 7,000 subscribers by the end of the year, so help me do that, guys. Subscribe to the channel. Only 10 or 9% of you are actually subscribed to this channel. And all I'm going to be doing is teaching risk management techniques to come out of the crypto bull run during the crypto bull run. Everybody's going to be hating me, guys, because I'm going to be taking profits and I'm going to look like a bear when everybody else is going to be a perma bull. But I'd prefer to be a black sheep, and I prefer my community to have a cool head. So subscribe to the channel. Right, 3MA inputs. What we've got, guys, here, we've got 3 different moving averages. As standard, you've got the 50, the 100, and the 200. Getting rid of that. I want the 20 here, my 20 moving average here. I want my 50 moving average in the middle. So change it here, guys. Change that to 20, change that to 50, change that to 200. 20, 50, 200. What does that mean? That means 20 moving average is 20 of these candles. This is the daily chart. So it's 20 days and it's averaged out, and the line gives you the average. Same for the 50 days accumulated, and the same for the 200. So we've got that up now. What we're going to do is just change the colors. Got plot 1. Just make that a bit thicker. We've got plot 1. Make it even thicker, actually. That's going to be red. And that's our 20 moving average. Okay. Next one. It's going to be yellow. That's going to be 50 moving average. Next one, green, which is going to be 200 moving average. Right, the 200 moving average is king. The 200 moving average is going to determine whether we're bullish, and it's going to determine whether we're bearish. If we're above the 200, we're bullish. If we're below the 200, we're bearish. So how is this going to work, and how is this going to help you identify when the market's changing and how you can get out of the market? What we're going to do is we're going to follow it along. We want the green at the bottom, we want the yellow in the middle, and we want the red at the top. The red's the faster pace moving average, the red's the 20 moving average, the 50 is the slower pace moving average, and the 200 is our identifier as to whether we're bullish, whether we're bearish. And that's our last line of hope if price action comes back to there. So what we're going to do is we're going to follow this along, and I'm going to show you what I mean and why golden crosses are significant when retail come into the market. So a golden cross is this. Golden cross is this. When the 50 crosses over the 200, you'll get a golden cross. When the 50 crosses over the 200, then you get an acceleration of price. Now, you'll see one thing that happens when the 50 crosses over the 200. Price action pushes above the 50, price action pushes above the 200, comes and tests it as support, and then it goes, look, see how price moves with this 20 period moving average, and then you pull back. Now, this is a signal for me to tell you when you've got a pullback and when it's time to come out of the market. So this is the daily, guys. And what I want to show you is once you lose the 50, then expect a pullback. These are lagging indicators, but these are good indicators for anybody that's new to crypto, anyone that's new to trading, to tell you exactly when something needs to happen. So you've dropped the 50. Once you drop the 50, that's a move to the downside of 10% on Bitcoin. So you've dropped 10% on Bitcoin. Then what you're looking for is price action to come above the 20 and the 50 and for the traffic light system to come into play. So if you use this as the example, let me just zoom in here. Use this as an example here. Price action's pushed above the 20, it's pushed above the 50. However, traffic light system's not in play because the 20 is below the 50. Remember, we need green, yellow, red. What happens? You get a cross here. Price action's above there. Let's pull this back down. Price action's above there, and then you get an acceleration in price until you drop the 50. This is the important thing, guys. You've got your 200, you're bullish or you're bearish. You've got your 50, identifying whether you're going to get a pullback. You drop from the 50. That means that there's an indication that you should be out of the market and you're expected a pullback. Happened again here. Market pulled back 15%. How would you identify when the market's pushing back up again? Here, when the 50 crosses over the 20. Then you get a push up. Then how do you identify that this is a fake out, which it was? Got a double top, you got a lower low, lower close. Price action falls again below the 50. And then when you drop from the 50, that's a move to the downside, nearly 20% this time. So with this choppiness here, guys, this is the distribution phase of a market. When you've got a distribution phase of the market, that means that the smart money that we're accumulating down here during the accumulation phase are distributing down here. So they're distributing down here and they're distributing down here. We can tell this by losing the 50 period moving average. Now, how can we tell when something's changed? You need to turn bullish again. We need the traffic light system to come into play. Green at the bottom, golden cross to happen where the 50 crosses up. Then you've got the 20 period moving average running afterwards. So with these being lagging indicators, guys, you've already had a lot of the move before it's even happened. So at this point here, that's where we get the cross. That's where we've got the traffic light system in play. They're fanning up, the 200's fanning up, the 50's fanning up, the 20's fanning up, and you can see what price does on the back of that. So that's bullish. What about bearish? We'll go back exactly the same. So this is a way, guys, how you can identify. One way you can identify whether you're bullish or whether you're bearish at one point. You can look at this and you look from the bottom left of the screen to the top right of the screen. That's indicating higher highs, higher lows, higher highs, higher lows. That's bullish. Opposite, top left, bottom right, that's bearish, putting in lower highs, lower lows. So you can see the traffic light system again here, guys. So what was bullish has got to flip in reverse for bearish. And remember, below the 200 daily moving average, then you're bearish. You can tell that. Price action completely reacts to the 200 and stays below the 200, indicating these lower highs, indicating the lower lows. And the traffic light system is in play at this point here, which is the opposite to the golden cross, the death cross. So that's how you can get indications, guys. Just put the 3 moving averages up, change the inputs to 20, 50, and 200, stick it green, thicken it up, guys, so you can see. And then that's going to help you identify at any one given time whether the market sentiment is changing. It doesn't happen every time, guys, but one thing that does happen is when it comes back up, it gives you an indication. Once the traffic light system's in play again, you've got a possibility of it pushing up. And if you're wrong, that's telling you it's wrong because you've closed below the 50. You can come back up, wait for it to happen again. And then ultimately, when they're all fanning in the correct direction, that's when the market is really running. So that was just to simplify things, guys. Follow my channel, follow my journey. Like I say, I'm just a normal person that's trying to make it during the course of this crypto bull run. I've educated myself for the last 4 years, and I want to just pass on all that information that I've taken on to you guys so I can give the community the best possible chance of success. Nobody believed in me, guys. The last 4 years, I was saying that Bitcoin's going to be going in people's pensions. I was telling people at work. My old boss even called me into the office and said to me, you need to stop doing crypto. I asked to go down part-time and he said, you need to stop doing crypto. You need to focus on a 5-day week. That's what you do in life. And I said to him that all I wanted to do is try and beat inflation. He turned around and said to me, inflation is nothing but a machine. Take that what you will, guys. But sometimes people just don't know what they're talking about. Nobody believed in me. Nobody believed in crypto 4 years ago. And that's why I started my YouTube channel, guys. I had nobody to talk to, and I wanted to join and be a part of a community where we can all have the same interests, all learn from each other. I want to learn from you guys as well. One of my beliefs is that I can learn something from everyone. So I want to learn from you guys as well. Crypto's a minefield and I don't know everything, but I'm going to continue to develop myself during the course of my journey. So if you want to follow my journey, guys, subscribe to my channel. Take care of yourself and goodbye from me.